Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Valero Energy Corporation, one of the largest independent petroleum refiners and marketers in the world. Valero operates in the highly volatile energy sector, providing refined petroleum products to a global market. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Valero has been a significant player in the energy sector for many years. From a behavioral finance perspective, how do biases like the status quo bias and the availability heuristic influence their decision-making, especially in areas like operational efficiency and investment strategy?
The status quo bias is particularly relevant to Valero's approach, especially in how they manage their refining operations and investment decisions. The status quo bias refers to the preference for maintaining existing conditions rather than making changes. Valero leverages this bias by focusing on optimizing its existing refineries and infrastructure, ensuring that they operate at peak efficiency. This conservative approach aligns with the status quo bias, as it allows Valero to maintain operational stability and reduce the risks associated with making drastic changes in a volatile industry. The availability heuristic, another key behavioral finance concept, also plays a significant role in how Valero approaches its public relations and investor communications. The availability heuristic refers to the tendency to judge the likelihood of events based on how easily examples come to mind. Valero uses this bias by highlighting successful past investments and operational milestones in their communications, making these positive outcomes more available in the minds of investors and stakeholders. This helps build confidence in Valero's ability to continue delivering strong performance, even in a challenging industry.
And this focus on leveraging the status quo bias and availability heuristic has helped Valero maintain its leadership position in the energy sector, appealing to both investors who appreciate operational stability and those who value the company's track record of success.
Exactly. Valero's strategic use of the status quo bias in maintaining operational efficiency and the availability heuristic in reinforcing investor confidence appeals to those looking for a company that balances stability with growth potential. However, this approach also means that Valero must carefully manage the risks associated with fluctuating oil prices, regulatory changes, and environmental concerns, particularly as the energy industry continues to evolve with new challenges and opportunities.
Let's talk about diversity, equity, and inclusion at Valero. As a major player in the global energy sector, DEI is particularly important for Valero. How does this intersect with behavioral finance?
Valero's approach to DEI is crucial, especially as the company operates in a global and highly regulated industry where inclusivity can drive better decision-making, innovation, and employee engagement. From a behavioral finance perspective, strong DEI initiatives can enhance Valero's ability to innovate and adapt by fostering a culture that values diversity and inclusion. A commitment to DEI allows Valero to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in the energy sector. For investors, Valero's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help Valero build stronger relationships with employees, customers, and communities, reinforcing its brand as one that values inclusivity and ethical leadership.
Investors are increasingly considering DEI when evaluating companies, especially in industries like energy, where the ability to foster inclusivity and innovation is critical to long-term success.
That's right. By embedding DEI into their corporate culture and operational strategies, Valero not only improves its ability to serve a broad range of stakeholders but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to market adaptation, Valero operates in a highly volatile and capital-intensive industry. How does the company adapt to changing market conditions and technological advancements, and what role does behavioral finance play in this?
Valero's strategy involves continuously adapting its refining operations, investment strategies, and sustainability efforts to meet the evolving needs of the energy market while maintaining its focus on operational efficiency and profitability. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with market volatility, technological advancements, and shifting consumer preferences. Valero's ability to understand and respond to new market trends such as the increasing demand for cleaner energy, the shift towards renewable fuels, and the growing importance of environmental sustainability allows it to stay relevant and competitive. By using data analytics, market research, and industry insights, Valero can identify emerging opportunities and adjust its strategies accordingly, helping to mitigate risks and capitalize on new opportunities in the energy sector.
And this adaptability is essential for Valero, especially as they face competition from other energy companies and the growing demand for more sustainable and environmentally friendly energy solutions. Their ability to maintain their brand's relevance and leadership in a changing industry is key to their continued success.
Exactly. Valero's focus on understanding market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the energy sector while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in regulatory landscapes, environmental policies, and competitive pressures.
Now, let's compare Valero to other companies in the energy and refining sectors like ExxonMobil, Chevron, and Phillips 66. How do the behavioral finance dynamics differ?
Valero's dynamics are often compared to other energy giants like ExxonMobil, Chevron, and Phillips 66, particularly in their approach to refining operations, market expansion, and competition. Valero's strength lies in its focus on refining and marketing petroleum products, appealing to investors looking for a company that balances operational efficiency with market leadership. ExxonMobil, with its emphasis on integrated energy operations and global scale, appeals to investors interested in a company that prioritizes diversification and global reach. Chevron, known for its leadership in upstream and downstream operations, attracts those looking for a company that is driving advancements in energy production and sustainability. Phillips 66, with its focus on refining chemicals and logistics, appeals to investors interested in companies that integrate supply chain efficiency with market excellence. Valero's behavioral finance dynamics are shaped by its reputation for operational efficiency, strong market presence, and adaptability, making it an attractive option for those seeking stability and growth in the energy sector.
And unlike ExxonMobil, which focuses heavily on integrated energy operations, Valero's strength lies in its specialization in refining and marketing petroleum products, appealing to a different type of investor in market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For Valero, the focus on refining, operational efficiency, and market adaptability provides a unique value proposition in the energy sector.
To sum up, Valero Energy Corporation's approach to business is deeply influenced by behavioral finance principles, whether it's through their refining operations, adaptation to changing market conditions, or their approach to DDI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Valero's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.